In the early days of human civilization, before banks, before currencies, before digital wealth, there was only one system: survival through exchange, barter. But this system had a flaw. A farmer with grain needed tools, but the toolmaker did not need grain. This inefficiency forced humanity to invent something revolutionary: money. But what if money was never just a tool? What if it was a system of control? Historians trace the earliest form of money back to Mesopotamia, where silver was used not as coins, but as weight, measured, recorded, controlled. But the real transformation came later, when metal coins appeared, standardized, stamped, authorized by rulers. Money was no longer just value, it became power. But something even more mysterious happened: paper money. At first, it was only a promise, a note backed by gold. But over time, that promise began to change. Governments realized something powerful: they could print value without owning it. But the real secret was still hidden. Modern economists call it fractional reserve banking, a system where banks can lend more money than they actually have. But how is that possible? Because money is no longer physical. It is belief, numbers on a screen. But what happens when belief breaks? Money today is not printed, it is created digitally inside banking systems, but not in the way most people think. When a bank gives a loan, it does not take existing money and hand it over. It creates new money from nothing. This process is called credit creation, and it forms the backbone of the global economy. But the system goes deeper. Central banks control interest rates. A small change can influence entire nations. Lower rates mean more borrowing, more money, more economic activity. But higher rates, they slow everything down. But scientists and economists discovered something fascinating. The economy behaves like a complex system, similar to physics: unpredictable, non-linear, sensitive to small changes, a concept known as chaos theory. A small financial decision can trigger global consequences, like the 2008 financial crisis. What began as a housing market issue turned into a global collapse. But the real question is, was it a failure of the system or a feature of it? Because every crisis leads to something unexpected: more control, more regulation, more centralization. But the real secret was still hidden: digital currencies. The future of money is no longer physical. It is digital, invisible, controlled by algorithms. Cryptocurrencies introduced a new idea: decentralization. Money without banks, without central authority, based on mathematics. Blockchain, a system of trust without trust. But governments responded quickly. They are now building their own digital currencies, CBDCs, central bank digital currencies. But these are different. They are programmable, trackable, controllable. For the first time in history, money can be monitored in real time. But this raises a deeper question: is money evolving,
Or is control becoming more precise? Because money has always been more than value. It is a system of influence, a tool of power, and a reflection of human belief. But what happens when belief shifts again? What if the next system is something we cannot yet understand? Because throughout history, money has never been just money. It has always been a hidden system.